Avid Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avid's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avidresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, you said we're in an awkward time. Can you explain?
Sure. So the stock market, everyone is still in a very kind of bullish, and we're in this euphoric kind of bubble stage for the stock market. I think most people would agree we're in a bubble, a Fed-induced bubble, where they just keep dumping money into these markets, into the system, and it's helping drive prices higher. But there's a very big disconnect that's taken place over the last 2.5 weeks. We've seen all the leaders, the big tech companies, the big tech sectors and pockets that have been leading the way for almost a year. They have definitely taken a back seat. They are no longer the leaders. They have lost their momentum. A lot of them have actually started downtrends. And the strongest index, which was the NASDAQ, has also actually started a new downtrend. It sold off over 8% in the last couple of weeks. And the average investor really still has absolutely zero fear in this stock market, because we're seeing this kind of tipping point, is what I'm calling it, where the leading sectors have fallen to the back seat. The NASDAQ is in a downtrend, yet the SP 500, the Dow, the Russell 2000, they're all still clinging on in an uptrend and holding their ground. But when the leaders have fallen out of favor, that's usually a sign that the market is going to have a much deeper correction. So everyone is seeing a very bullish side of the market, and they're not really realizing that the internals are crumbling. Most of the sectors have actually started topping phases or started downtrends, and a lot of people don't see that. So meanwhile, the major indexes are still holding up. There's very little holding the price up right now.
With that trend, what should you be doing right now? If people aren't scared, should they be?
Yeah, I think people should definitely be scared. And of course, that's why we're at this major tipping point, is because no one is fearful. We've seen everyone sell off precious metals. We've seen them sell off bonds. The put-call ratio, it remains at very, very low levels. Even with strong selling last week, it never even spiked up, which is telling us that everyone just keeps buying leverage to the upside. The deeper this market pulls back, the more bullish they are. And so people need to be fearful right now, because the market is very close to rolling over and going into a very big sell-off. We could see another 3 to 8% sell-off in the stock market here, and that could happen over only a 5 or 6 day window. So it could be a very violent collapse. So what we have done, because we're trading the leading sectors started to show signs of weakness about a week or so ago, actually about 2 weeks ago now. And so we've moved to cash, simply because the leaders are not leading anymore. The stock market's becoming very unstable. We've seen volatility pick up, big intraday price swings. So what we're doing right now is we're sitting in cash. We're looking to do some options trades that are non-directional, so that it doesn't matter if the market goes up or down. We can just pocket premium and forget about the market direction for a while. So every type of market condition has got a different type of strategy that you need to deploy in order to get the best risk-reward ratio.
We'll have more with Chris Vermeulen right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine, situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Chris Vermeulen. Gold and silver seem to have fallen out of favor slightly. Are people trying to get back into precious metals?
Yeah, I think there's a lot of fear. Well, we continue to see precious metals move lower, especially gold and gold miners. They're definitely out of favor at the moment. They're in a fairly strong downtrend, but we have seen gold and gold miners fall right down to a very strong support zone. I think we're going to see miners probably bounce here and start to rally. I think the stock market's going to become a little more volatile or continue to be volatile like it has been the last week or so, and I think that's actually going to drive some money into the precious metals market because the metals and miners are oversold and they look ready for a bounce. They're at support. And a lot of times when the market is close to selling off, the stock market, we tend to see money shift into bonds and into precious metals as a kind of defensive safe haven type of play. So I like gold, silver here. I still think there's more downside. I think when the stock market does have a correction and we see some fear actually hit the stock market, we will see gold and silver pull back more. So I'm still bearish on metals for probably another month or two. After that, I think we'll be seeing a very strong opportunity to get back into the precious metals and miners sector. But I think there's more headwinds. I think there's going to be some panic and strong selling in the stock market, which will pull metals and miners down with them. But after this flush out that I think is about to happen, I think it's going to be a great opportunity for precious metals because the long-term charts are still pointing to much higher prices. It's just these short-term charts are saying, hey, it's still under selling pressure. There's some more risks, and it's still in a downtrend. So we don't want to jump the gun and try to pick a bottom.
Platinum and palladium, what are they doing?
Yeah, platinum has broken into a nice bull market this year. It has continued to hold up very well. Obviously, in the last week and a half, it's been pulling back a bit, but it's got a very strong chart pattern. Long term, we should see platinum continue to move higher with the rest of the precious metals. I do, again, think there's going to be some downward pressure in almost all asset classes, commodities and stocks, over the next month or two. It's going to be a bit of a struggle, but I do think precious metals and platinum are going to do very well. Platinum is in a fresh new bull market, and it really has just had its first run, and this is its first pullback in pause from that. And usually the first pullback and pause in a new bull market is one of the best opportunities to get into something. And when you look over at palladium, it had a huge run last year, or even 2019, and it kind of peaked out there in 2020, and it's been consolidating in a sideways pattern. I think when palladium can close above, the $2,500 mark, I think that'll be probably the signs of a new bull market. But short term, again, I think it's going to be under some more pressure, could pull back. I think the precious metal sector just needs to kind of be avoided here for a month or two until we see how the charts play out over the next couple of weeks, because we could get a pretty good downdraft, as I was saying.
Is the stock market going to be shades of March 2020? I don't think we're going to see something like that. Obviously, we're going to need some type of event to recreate that type of drop. I do feel like the stock market is very fragile. I've felt like it's been like that for years, actually. But again, you don't want to pick a top, and you shouldn't, and you really need to wait for confirmation for some of these bigger trends to form. I think there's a lot of risk that we could very easily see. I'm seeing like a 3 to 8% pullback over the next potentially week or two. But there's definitely an opportunity for the stock market to correct 15 to 20% in a heartbeat, which would bring us really just back down to the levels that we saw late last year, the September consolidation. And that would still be a bullish sign long term. So there's a lot of downside potential. You got to be very cautious here. The stock market is giving very mixed signs. To me, it's 50-50 which way it's going to break. Obviously, price falls a lot faster than it rallies, so it's a lot harder to get out of a position when it goes into free fall mode. So I'd just be very cautious. Again, we were trimming positions, and I think every year we see a 15 to 20% correction in the SP 500 almost. So it's not out of the norm for that to happen. And I think we're close to something like that.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what do you see happening in the cryptocurrency sector?
It's been a pretty wild ride with Bitcoin. It's had some very nice big waves to the upside, and right now it's trading it's pulling back off those highs. It's consolidating, very similar to what it did at the very beginning in January, where it has a big push and then has a multi-week pullback. That's exactly what it looks like it's doing again here. At this point, Bitcoin is still in a full-on raging bull market. If we were to look at the price chart of where it could go next from here, based on the late January bottom, and then the recent rally that we saw here in late February, we're looking at around $73,000 a Bitcoin going forward. Now that should, if this pattern does play out like it's pointing to, that should happen over the next 30 to 40 trading days. So there's a lot of upside potential for Bitcoin. It is definitely showing signs that it's getting a lot more volatile than normal. So we could very easily get a huge blow-off move up to that 73,000 area. It could very easily pull back very sharply after that, kind of like an exhaustion blow-off top, which is when something goes straight up that last couple of days, it usually comes straight back down, and you get a good feel for what that price action looks like. Is if you were to go to a weekly chart of Bitcoin, and you can just see how we are going in that week after week, these straight up massive green bars with big red reversals to the downside like we saw a week ago. That is a sign that this is just a pure momentum blow off top, and we don't know where the top is, but at any point it could just completely collapse. So it's a short-term kind of active traders type of play right here.
What's going on with oil?
Well, crude oil has gone all the way up. It ended up hitting our $62, $63 per barrel target on the continuous contract, and there's a few things going on. I mean, when we look at it, it's major resistance on the price chart from all the way back to 2019, 2018, and actually before that. But it's also a Fibonacci measured move, meaning the lows that we saw last year in April, that pattern that came out of that was pointing to an upside price target of the 62, 63. So we've hit a resistance level just based on the power and the momentum from the chart pattern itself, which is very important. This should be a significant high, a top for crude oil at this point. And when you look at the energy sector stocks, they're coming up to a pretty significant resistance area as well. They're recovering. They're getting back to the level where they kind of broke down last year during this whole collapse, and they're about to fill a gap there, and that's going to act as a resistance zone. So while energy's had a really good run, I think it may have had its day here, and I think the stock market could start to correct. It's going to pull oil and energy stocks. Everything is kind of at a really critical pivot zone. It could be the dollar. Energy stocks are at resistance. The leading stocks are breaking down. Bonds are at support. Precious metals are testing support. So everything is ready to rebound in the opposite direction than what has been going recently. So that's what everyone's got to be really aware of.
Is the 10-year Treasury bill telling us what the future of interest rates is?
Yeah, the spike in yields is definitely showing that we've got fear in this market. People are not wanting to own bonds. They think there's going to be a lot more risk in the U.S. and that's not a good sign. When we see yield spike, it's generally a pretty bad sign. So that's another kind of early warning indicator that there's definitely some fear being priced into this market in terms of the yields. And I think we're going to see, the yields kind of are going to happen quite a bit before we see the stock market roll over. We wrote about this in an article a couple of days ago, showing how the last time yields kind of hit these levels, we saw major market tops in the stock market. And this goes back, you go back like a couple decades, and this has happened several times before when yields spike and we see this big divergence in what's going on there. So it is definitely nerve-wracking. But it's a slow indicator. It doesn't mean we're going to reverse tomorrow or next week. It could take several weeks or several months for the stock market to actually start to lose more momentum and start to break down. So it's just a big warning sign, and that's it.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.